Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 15th of November. So the markets are looking quite interesting. Equity indices in the US have started on the downside. The S&P 500 is now approaching the broken October high that was taken out on the election day. This area is now going to be a massive zone for the market. It needs to hold here for the bullish trend to remain intact. Otherwise, we could see a deeper correction. The area I'm talking about comes in at around 5,882 on the upside to this level right here at 5,857. We have the 21-day exponential moving average converging within that zone, making it a key technical area. So if that area holds, then we could see a bounce back towards that 6,000 level in the days ahead. But initial resistance will now come in around 5,938, basically yesterday's low. However, if the support area breaks down, then the next downside target could be this area here between 5,772 to 5,793, which is the base of the most recent breakout. The line in the sand is obviously the most recent low for me right here. And if that area gives way, then we will have had our first lower low in place, making this a bearish market. But for now, we are giving the bulls the benefit of the doubt. So let's see if they will be able to defend one of these support levels. Now, the pressure has been building on crude oil prices for a potential breakdown because of several bearish macro factors, which I've discussed in my report published earlier. For more details, you can read that. But from a purely technical point of view, this area between $67 to $68 marks a key support zone that could give way in the coming days. And if it does, then we could see a quick drop to below the September 2024 low of $65. On the upside, key resistance area is right here between 69.30 to 70, the psychologically important level. That area was tested yesterday and it held, but we could potentially see another test given the fact that the price of oil is basically stuck in a consolidation. So I wouldn't rule anything out at this stage, but the pressure is indeed building for a potential break to the downside, and that's the direction I'll be watching out for in the days ahead until and unless something changes fundamentally or we see a bullish looking price candle in the coming days. Now, one market that has also been rallying alongside the equity markets has been Bitcoin, which has tried to break above the 90,000 level for several days, and so far it's holding below it, although it did try to break above it earlier today. So let's see what's going on, and zoom in on the lower time frames. And as you can see on the hourly chart, there is a potential head and shoulders pattern in the making, but I wouldn't read too much into it until we have a confirmed breakdown. But the fact that price is testing a very significant psychologically important level, it makes this potential head and shoulders pattern a little bit more relevant. And in addition to that, you have momentum indicators on all time frames that signal overbought conditions. So if you go to the daily chart, you can see that the RSI is above 75. How about the weekly time frame? On this time frame too, it is above 70. Now, what about the monthly chart? Well, as you can see, again, same picture. That being said, in the past, Bitcoin had been even more overbought before the market topped out, but every time it has got to around that 70 level, you can see on this monthly price candles that we've seen a bit of a drop around that 70 level. So watch out for a potential pullback. And if we go back to the lower time frames and the hourly chart, you can see that it tried to break above this trend line connecting the most recent highs on the hourly time frame, and it failed. So this is potentially a bearish signal, but let's see if Bitcoin will break below some key support levels. And for me, this level right here is an important zone because this was the last low made prior to Bitcoin breaking above that 90,000 level decisively before struggling to hold the breakout. So if this level gives way, I think that would be the bearish trigger I would be watching out for. Now, in the FX markets, the dollar is continuing to push higher. We had some stronger than expected retail sales data from the US earlier, and that caused the dollar to come back after being down across the board earlier today. Now, the euro dollar is looking a little bit oversold here, as the RSI suggests on the daily time frame, and the fact that it has already tested the 105 level, which was my main downside objective, makes me wonder whether we will get a bit of a oversold rebound. That being said, we did get a oversold rebound from the low yesterday. So, is this the resumption of the downtrend? Well, that remains to be seen. A potential break below 105 today could pave the way for the October low of 104.48. I think the euro dollar is reaching for that level now, given a bearish macro backdrop. And it could go a lot lower than that, who knows, but we'll take it from one level to the next and reassess the situation as more price action unfolds. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.